In the 13th webinar, I defined technical analysis as investors' perceptions of a share as they are reflected in the share's price and volume pattern, in other words, in its charts. That's a very important definition, and it's one that you should think about and study. Now, the subject of technical analysis can be broken down into three distinct sections. The first section is formations and trend lines. The two ideas are very closely linked. The second section is line charts, together with the indicators and various formulae that can be applied to line charts to give you good buy and sell signals. The third area is wave and cycle theories, of which there are quite a few. Now, in this webinar, we're going to focus just on trend lines. And that is a very basic indicator, and it's where most people have to begin. In studying these, you must remember that technical analysis is about investors' perceptions. So every technical indicator or technical idea has some human behavioral characteristic underlying it. And I will try as far as possible to identify that behavioral characteristic for each indicator or idea that we deal with. Now let us begin with trend lines. Let us consider a chart. Here you can see a chart which is rising steadily. Onto this chart we can draw a trend line connecting these three low points. A trend line on a rising chart is always drawn connecting two or more low points. A sell signal is given when the price breaks down through the trend line over here. The opposite is true for a falling chart. As you can see in this share, it is in a downward or bear trend, so we can draw a trend line connecting these successive tops. In this case, the trend is very reliable, and we can actually connect as many as 7 tops. The more points you connect with a trend line, the more reliable it becomes. Finally, of course, there is an upside breakout over here. Now let us consider another chart. This chart is in a strong upward trend between two parallel rising trend lines. This is what technical analysts call a channel. Channels can be either upward or downward. And once again, the breakout occurs where either the upper or lower trend line is broken, and the share is expected to continue in the direction of the breakout. Consider this chart. If the share moves back and forth between two trend lines which are horizontal, that is known as a sideways market. The lower trend line is called a support line, and the upper trend line is called a resistance line. A support shows an area of support, usually because one or more very large shareholders have decided to buy shares at that level. Every time the share falls to that level, they begin buying. And of course this has the effect of supporting the price at that level until further buying orders are filled or the share price changes direction and begins a new upward trend. The opposite is true of a resistance line. This occurs where large sell orders are in the market at a certain price. And of course those sell orders kick in as soon as that price is reached, and they cause the share to move back again each time it reaches that level. Once all the sell orders have been filled, the share is free to move up again and a breakout occurs. A sideways market can occur after a long downward trend, as it has in this chart. If the breakout is on the upside from such a sideways market, then it is called an island. The entire formation, that is, the downward trend, the sideways movement, and the upward trend, are called an island. The general rule with sideways markets is that they will continue in the direction in which they break, up or down. A sideways market is an area where the share price moves up and down within a narrow trading range. This is sometimes also called an area of consolidation or an area of backing and filling. Once it's broken, of course, then your new trend will begin. Sometimes a sideways market can occur halfway up a trend. Consider this chart. Here you can see a period of uncertainty which comes after an upward trend. And then that uncertainty is resolved and the upward trend continues. Now, what I suggest is that you spend some time with your software looking for various different uses of trend lines and how they can be used to help you with your analysis.